Alright, so we're gonna go over all the trades that I've taken this week, and we'll pretty much just go over how the week's gone so far. So on the last week, I said that I managed to catch shorts on this day. On Euro USD, I had a swing entry at this fair value gap. So yeah, this one. So I had this swing entry here, and my target was these equal lows, and I held this over the weekend. So yeah, I wanted to see Monday to run these lows, and on DXY as well, we had those triple equal highs into that daily volume imbalance, daily imbalance, and also the previous week's high as well. So I wanted to see a sweep of that into that key level, and then see if we can frame shorts from this, or even look for continuation longs. So firstly, I wanted to see how the Monday candle will close, and the Monday candle closed like this. So we had this large, not large, but we had this Monday range here, right? So I wanted to see a potential previous day high sweep, so sweep of the Monday highs into the key level, and then look for shorts into these into the Monday lows and this daily imbalance. So on Tuesday, let me get my Monday range indicator. So we have the Monday range here, and on Tuesday, we had this 4-hour fair value gap here. So I wanted to see Monday to take out the previous day high and then look for shorts back to the Monday lows, or if there was a potential potential scalp play towards the Monday highs, and then once we take out the Monday highs, then look for shorts from there. So on Tuesday, what I was actually looking for was longs from this 4-hour fair value gap to the Monday highs. So we came into this 4-hour fair value gap in London session, and this to me looked like a London reversal play. So yeah, we swept it, traded higher, created this order block, and then we'll go on to the 15-minute time frame. So 4-hour fair value gap was the key level, went higher, formed this order block, retraced into it. So this firstly was not enough confirmation for me, right? I don't really like to take these order blocks, especially by themselves. But yeah, I wanted to see if, especially as we swept all these highs into this fair value gap as well. So price could have came higher and then went lower again, and then gave that displacement. So this is I pretty much always wait for another confirmation here when price does this, pushes higher, sweeps some internal highs. So I always wait for some sort of confirmation here. So we have this order block and this fair value gap, and we came into it, and then we pushed higher. And what does this become? This is the propulsion block. So make it clear like this. OB, BB. So at this moment in time, I took my shorts on Euro USD. Same thing here. Bear with me real quick. So we had the London high of the day profile. So for me, this is not really, it wasn't really in line with the weekly bias that I had, right? Because I wanted to see price either take out the Monday lows into the daily fair value gap and look for longs, or take out the Monday highs and then look for shorts back to the Monday lows. So that was my game plan. But for me, because we had the Monday lows engineered here, and we had this 4-hour fair value gap, and the order flow was still bearish, I had the idea to take a scalp short into the Monday lows. So that was the idea. And then here we formed this propulsion block, which was this is the propulsion block, right? Order block here, propulsion block. So that was my entry on Euro USD. So I took a short here at this candle, stops above the high of the day and not the propulsion block. You could also put it there, but I wanted to be safe, and I put my stops at the high of the day. So I took this trade targeting this low here, which is the Monday low, and then unfortunately price will push all the way down. We formed this hourly fair value gap, so I wanted to see a potential New York continuation from this hourly fair value gap to the Monday lows, but what we ended up doing was creating equal lows, and then we pushed higher. So to me, because we're in such a discount here, right? Look how, like, this is such a discount. We've already taken out some sell side liquidity, so at this point this trade is not really the most high probability trade, right? It's probably more ideal to look for longs below the Monday lows than try short from here, or at least wait for price to engineer more liquidity and potentially even form a daily fair value gap. So that would have been the way better play. Trading inside of the Monday range is usually not like the most high probability play. You know, it's better to wait for that daily key level to form and wait for that previous day high sweep as a key level, and then short towards the range lows. But here, usually price likes to engineer liquidity at this point. So I had this in mind, and if price was not able to push lower from this hourly fair value gap and take out these lows, then to me that's definitely a seek and destroy profile. So had this hourly fair value gap, came into it, was expecting New York continuation profile, had this 15-minute fair value gap as well, came lower, and then at this point I moved my stops to break even, right? Because if we don't, like, if we come higher after rejecting this fair value gap, because we swept this internal low, which is the lunch lows, so say if we sweep this low and then push back higher and come back for this high, then it's likely consolidation profile, because price is failing to take out lows and could actually come back for the highs again. And if you look at the higher time frame picture as well, this could be an inside candle and engineer daily fair value gap and then a previous day high sweep to go short, which is exactly what happened. So at this point, I was at this point, after we took out this low, I moved stops to break even, and then stopped our break even at this candle, and this hourly close is clear indication that we were gonna come back for these highs again. So same thing on DXY. For me, I was anticipating the Monday highs to go at this point because we closed above this opening gap. We formed this bullish OB, and on a 4-hour time frame as well, we closed above the opening gap as well. So I was anticipating the next 4-hour candle to be open, low, high, close, but we left equal highs here. So for me, this solidified the bias even more that we can anticipate. If price takes out the previous day low, we can look for longs towards the equal highs, because this is now a high probability drawing liquidity. Low resistant highs, daily key level, previous day low, seep into the previous day low into the key level, and is easy longs towards this high. So for me, also AMD consolidation, accumulation, manipulation into the key level in line with high time frame bullish order flow. This is all bullish right now, and then low resistant highs as a draw on liquidity. So that was the game plan for the next day. So on this day, I got stopped down break even on Tuesday, and now we have we have this daily fair value gap, the Tuesday lows, and then we have the Monday highs as the draw on liquidity. So what we had here, we did not take out the previous day low on DXY, but if you look at EU, on EU we took out the previous day high here, right? And then if you look at GU, on GU, not only did we take out the previous day high, but we also took out the Monday high. So we have an SMT with EU and DXY at the previous day low, and then we have another SMT with GU and DXY at the Monday lows. So that's a high probability confluence to expect a reversal, right? So all I was looking for on EU and GU was some sort of hourly displacement to get short, right? So that's my first position. I got stopped at break even on that, and then also I had this trade on the short from this fair value gap all the way to these lows, and because we didn't get a reaction from this low and engineered the daily fair value gap, the anticipation was to look for continuation shorts here. So now we have the Tuesday highs. We also have this 4-hour fair value gap and this hourly fair value gap. Tuesday highs, previous day highs sweep into the daily fair value gap with equal lows here. This is a high, this is an A plus high probability setup. Like I would take this every time. So the next trade that I took, which I believe is the next trade that I took. So London high of the day, sweep high, London forms the high of the day inside of the bearish key level, daily key level, sweep the previous day high here and low resistance liquidity lows. So on here on this hourly fair value gap, I took a short here, and then my target was these lows, right? But you can see the delivery was pretty, for the whole week the delivery was pretty shit, right? So inside it, so 7 a.m. pushes higher, 8 a.m. consolidates, 9 a.m. also consolidates. I'll wait for price to form this propulsion block before moving my stops, and then once we finally got this hourly closure below this up close candle, this is the order block, right? And then this candle forms the hourly propulsion block. This is when I move my stops. I didn't move my stops to break even. I put my stops above the propulsion block high, and then I wanted to see this hourly fair value gap was holding up price, right? Because every time we came into it, for example here, we pushed up higher, and then this hourly candle was failing to break below it, right? You can see how choppy it is on the 15-minute time frame. We came and took the slow, pushed higher into this 15-minute fair value gap, which I can't lie, some people would probably think, oh yeah, we're bullish, we're going to go long off that. But again, hard to have from context. In this case, when we have a liquidity sweep into a bullish key level, I usually avoid taking trades here. I like to wait for another confirmation, but because in this case the high time frame picture was to anticipate price to take out these lows, and I don't expect a reversal from this low into the fair value gap. I anticipate the push higher to be a retracement, and this with the London high of the day, daily key level, previous day high sweep into the key level, equal lows, high time frame order flow is bearish. This one thing right here is unlikely to overwrite all the other things I mentioned. So took the short here, and as you can see, this price has just been consolidating from this hourly fair value gap to this bearish hourly fair value gap. So this is like trapped order flow, right? Price is stuck between bullish and bearish key levels. So you can see by how choppy the price action was this whole week, price is just holding up here. I think we had 8:30 news, which was this candle pushed higher, swept this high, and then went lower, and then again we pushed higher, and then pushed lower, and then swept this low, pushed higher again, and then we have finally London close. We got the break below this, but then again towards the daily close, we've seen this retracement higher. You know, even after we had this hourly candle closure below the fair value gap, you can see by how choppy the price action has been the whole week. You know, close below, next hourly candle pushes higher. We haven't taken out these lows yet. Price is just wicking about here, and I can't lie, I was watching this throughout the whole week, and this is easily one of the most stressful weeks I've had trading in a long time. This has not even been close, because you can see how tight this range is and how, you know, price is just not willing to go for these lows. But every time we left equal lows here, triple equal lows at this point, this just built my conviction higher that we're gonna take out these lows eventually. When are we gonna take out these lows? Sooner or later, but 100% we're gonna take out these lows before going higher. So for me, the bias does not change until we take out these lows. So yeah, price consolidates, and then Asia we drop, still haven't taken out these lows. And at this point, after we took out this low, I closed my position on most of my accounts, right? At this point, because I was up 2R and I was seeing how choppy price has just been the whole time, I closed on 2 accounts here, and then on another account I left the position running for these lows. But then again, because of how choppy price is, I just also closed it here. So I closed around, I think I closed around 1.5R, because I closed at okay, 1.85R. I closed my position around here, so around 1.85R, and then on another account I closed around 2R. And then at this point, if you look at GU, I also got over GU because I also took a short on GU, but I took a partial loss on this one. So on GU, this one I should have probably held in hindsight, right? But I'll go over the I'll go over GU real quick. GU, same thing as well, right? On GU, Monday range high. We have previous day high and a Monday range high into the daily fair value gap, and this inversion fair value gap sweep the previous day high into it. And then I wanted to wait for some sort of confirmation on hourly, right? But if you go on a 30-minute time frame, we closed above these up close candles forming an order block, down close candles forming a breaker, and then we closed below these fair value gaps forming an inversion fair value gap. So what I didn't wait for the hourly candle closure because I assumed that London made higher today anyway. So I shorted this next 30-minute open high low close candle, and then we closed back above this inversion, and then we chopped around. And then at this point, if you look at the times, shorted at 5:30. So if you look at EU at 5:30, which is lunch, EU was trading all the way down here and had this hourly fair value gap. EU was way weaker than GU, right? You can see here at this time GU only moved down this much, and then EU moved down this much. And then if you look at the Euro GBP at the time, my analysis on Euro GBP is that because we have these equal lows here, my anticipation is that we were going to see Euro be the weaker pair for the whole week, and at least until we take out these lows. But what we did is we swept this previous day low, and then we expanded higher, which really cooked my trades for the whole week. So yeah, I literally shorted GU around here, and at this point I was anticipating, okay, I might have fucked up because GU is the stronger pair and EU is the weaker pair, and DXY and EU both have an hourly fair value gap that hasn't been filled yet. So New York can retrace into that hourly fair value gap. This one here, New York can retrace into this hourly fair value gap, and GU can come all the way for these highs again and perform maybe another potential SMT. So once I seen these hourly candle closures, I closed my trade around here for like a 0.5R loss. And then what happened was, this is the craziest shit ever. So EU randomly switched strengths. You can see on Euro GBP, this is where the Euro and pound switched strengths. So at this point, pound was the weaker pair, and Euro was the stronger pair. So when I closed my trade, pound essentially flipped from being strong to weak, and Euro switched from being weak to strong. So I was basically stuck in this Euro short from here, and pound. Also, I didn't like the hourly closures here as well, so which was the reason I closed the trade. But yeah, failed to get below this hourly fair value gap on pound, closed around here, and then pound just had this massive dump. I think it had a 85 pip dump in New York and London close, and then you can see on EU had a 30 pip dump and retraced most of that move heading into the daily close. So I was basically stuck in this trade, and then GU, the one I closed around here, had this massive dump and it hit my TP the next day. So yeah, because GU took out this low here, and then DXY already took out the Monday highs around Asia session here. That's when I closed my EU trade around here, and then price still hasn't taken out the Monday lows on EU, and we just continue consolidating for the remainder of the week. So that was my trade on EU and GU, and then on the next day I did take another position on EU. I took two positions. One was a partial loss and the other one was a win, so we'll quickly go over those. So for me, because even though we've taken up the Monday highs, and this is like a big lesson that people can probably take from this, some people would automatically be looking for a reversal here. But because EU hasn't taken up the Monday lows, even though GU has and DXY has, there could be a potential SMT here, bullish SMT. EU fails to take out these lows and continues higher. But until we get some sort of displacement, like here, for example, right, we're getting some massive displacement. If we got that around here, then this would likely be the SMT confirmed. But because we haven't got that here, any pushes higher, running stops, is just potential to go short again. So what do we have here? So on Wednesday, we formed the high of the week here, right? Push lower, we left these equal lows here. And then on the next day, which is this day, Thursday, we had this push down in Asia, but we had this push back up in London. So essentially, this is all seen as accumulation. Price here, price is accumulating here, right, on hourly time frame. We haven't taken out the lows, we haven't taken out the highs. We have this hourly propulsion block here. This is a propulsion block, so this is an hourly key level here. And on a 4-hour time frame, you can see as well, this is an hourly order block. So far here, we haven't had any sort of intraday manipulation. On a bearish day, on a bearish expected open, high, low, close day, so this made the high of the week, so Thursday we can expect continuation. On an expected open, high, low, close day, it's always the same thing. You want to see some sort of accumulation and then a manipulation above the accumulation highs, and then you want to look for shorts after we swept the accumulation highs into a key level as well. So what do we have here? We have a 4-hour propulsion block, a 1-hour propulsion block. We have a 4-hour order block, also propulsion block. We have all these equal highs here that we have built up, accumulating throughout the day. Also, this accumulation manipulation doesn't have to form within London session. London and Asia session can be accumulation. So Asia and London session and majority of New York session was just accumulating, just building up stops resting above these highs. So we have all these buy stops resting above. Price runs above the accumulation highs. What does this trigger? It triggers people's stop losses that have their stops up here. And then what does it also trigger? Buy stops. People that think, okay, we're going to go long because we've broken out of the range. And traps all people that go long here. And people will put their stops at these lows, assuming that there's going to be SMT. So once I seen this, I already knew that people were going to get baited into this, which gave me even more conviction that we were going to go lower here. So I know some people are probably thinking, okay, we've taken out this low here, and then now we've closed above this down close candle, so now we have a breaker and order block. But again, the higher time frame context is that we have triple equal lows, and we just swept these highs into a bearish key level. You know, we swept some internal highs into a bearish key level. So, and we've done it with news as well, and we've been accumulating the whole day. So this is a intraday power of 3. So we swept the accumulation highs into the key level, and then we have these hourly closures signifying when we have wicks after running highs. This is a clear stop run. Some people call it a swing faded pan, whatever. This is a clear sign of a turtle soup where we run above a high and then close below it with a wick. You can expect the next closures to displace lower, right? So essentially what I did, the first position I took, which I can't lie, I probably should have held it, but I didn't have too much. I kind of lost my conviction because I didn't mark out this high. I marked out these highs instead. I marked out these highs, and what I did was I took a turtle soup entry. And I only take turtle soup entries if we have low resistant lows, which is equal lows, and a high time frame order flows on my side. High time frame order flows on my side. We have a bearish key level. We have engineered a bunch of equal highs, which price ran with news. So as soon as I saw this, I said, oh my god, this is very obvious news manipulation. This will get people to go long here and also stop out all the people going short. So once I seen this, I took a swing entry here. Not swing entry, but yeah, you know, hourly entry here into this order block. my stops above the propulsion block, but to be honest, I probably could have put it here and it would have been way more safer, but I was a bit risky with the stop loss and almost got stopped out here. And I think there was some, this was the 8:30 manipulation, and then we had 10 a.m. news, which is something else that, I can also mention, is that when you have multiple news red folders in one session, you can anticipate the first few to be some sort of manipulation, and then you can anticipate the last one to be some sort of distribution. So once I saw 8:30 pushing up higher, and we know the higher time frame context is we have these equal lows, high time frame order flows bearish. We just ran a bunch of highs into this bearish key level. This is a high probability chance that this is a manipulation, and we can expect the 10 a.m. candle to be distribution. So I took a total sweep entry here, but because I had marked out this high instead of this high, I didn't like how we closed above on this hourly candle, and then I closed my position for like a 0.4 R loss here. So I closed my position around here, and then instead I just wanted to wait for a lower time frame confirmation instead. So what I did was I was watching the lower time frames here, and I had this fair value gap marked out. And if we were bearish, you'll want to see price to lose this fair value gap on the 5-minute time frame, right? This is my lower time frame confirmation. 15-minute, there wasn't nothing clear, and I usually use the 5-minute time frame if it's post news, because news has a lot of volatility, right? So if you use the 15-minute time frame, sometimes you can miss the move because that is too high of a time frame. So I like to use the 5-minute time frame in this case. So we have this up close candle. We swept the high, came lower, swept the high again, formed this up close candle. If we close below it, that's an order block. We closed below it, formed the order block, but I didn't trust it as much in case we go for this high one more time. So we came back into the order block, and then we closed above these two down close candles with this candle here. This candle here, we formed this propulsion block, and then we also inverted this bullish fair value gap, which has been holding, right? You can see prices, the price has been wicking through the fair value gap, but it's been holding the whole time. So we have 3 bearish key levels. We have this order block, we have this propulsion block, and we have this inversion fair value gap. So at this point, that's multiple confirmations for me to go short here. So what I did, I took a short here at 10 a.m. news, pushed higher, 10 a.m. open high low close, with expecting this to be the high of the day now, accumulation, manipulation, and now we distribute. And we have these equal lows here on the euro. At the same time, if you look at DXY, what did DXY do? We were holding the Monday range highs. We came down and we swept this low, and we swept this low here, which was the Asia lows. So we've had a intraday manipulation. On an intraday manipulation basis, you want to see price take out intraday lows if you're bullish. Price takes out some sort of liquidity and then goes higher, which is what happened here, right? Fake market structure break, and then we go higher. That's all I look for when I'm, because that model there, it baits so many people into going short here, but it's just a liquidity sweep to go long. And I used to take these losses all the time, and once I reverse engineered this, it's a sweep inside a bullish order flow. It's just a stop run to go higher essentially. Once I engineered that, those are the losses I stopped taking. And anyone that longed this order block, assuming we have SMT here, we're gonna go higher here. I already knew that they were gonna get fucked here, so shorted here, and then I TP'd at the Monday lows fully on one of my accounts because I was trading a challenge account, and I needed just a bit more below the Monday lows to pass this trade, like somewhere around here. It was 2.6, yeah, I remember. I needed just below the Monday lows to pass the challenge, but to be honest, because of how choppy this delivery was on euro, and if you look at pound, this is pound the whole week. Pound has just been dumping from the Monday highs. Pound dumped 228 pips, and then if you look at euro from here all the way to here, that's at the time I TP'd, that's a 61 pip. So Euro GBP has just been ripping higher the whole week. So at this point I was like, okay, fuck it, I'm missing 0.5 off from this challenge, but I don't want to front run this whole position when price can reverse from the Monday lows. So I TP'd my position around here, and then of course it dumps there, and then I didn't get that extra 0.5 off, but it's minor. I managed to, you know, get it in this type of shitty price action, and I know a lot of people will probably get break evens and take losses inside of this range, or some people even take losses long inside of this range. This here is like what, you know, would blow accounts, and I used to get cooked inside of these ranges a lot of the time, but you know, you just have to journal these type of trades, and you know, over time, like with more experience, you'll start to see, okay, you know, this is likely a manipulation. You're likely to expand here. Maybe prices, you know, moving a bit dodgy. Maybe I should take my position off here instead of hold for these lows. You know, over time you'll start making like better decisions, and you'll start to realize, okay, these are the types of profitable positions that I should take. That in the long run would help me, you know, make more profits in the long run. But yeah, so we'll quickly recap the trades that I've taken. So if you ignore this trade that I TP'd on Monday, this trade here, break even. This one I closed for around 2R, and this one I closed for a partial loss of like 0.5. And then this trade I closed for a 2.3R trade. So 2.3, 2, 4. I'm up almost around 4R for the week, and then I had the GU loss. So I'd say I'm up around 3.5R for the week, trading inside of this range. So pretty good week for me. Very happy with the week. I think in these market conditions, this is very hard market conditions to trade, and so I'm happy with the performance and how I managed to secure profits inside of this range. So I'm very happy. And now, you know, this is why I wanted to take profits at the Monday lows, because the way now prices are ripping higher after tapping the daily fair value gap. So yeah, wait for the daily close and see how the bias, the high time frame, see the bias heading into the new week now, because you know we're still trading inside of this weekly fair value gap. Tap this order block. So yeah, I'm also long on GJ as well. I took this on challenge account, but to be honest, this video is already long enough, so I might just do this in a separate video. But yeah, currently long on GJ daily clean. So